Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the hidden workings of big companies and spill all the tea. In this video, we're going to decode a report that tells us about a company's very first steps in the public market, and let me tell you, it is quite the spectacle of numbers and promises. Before we jump in, if you love getting these nonsense breakdowns of corporate filings, make sure you are subscribed. And hey, we've got a growing community on Discord where we chat about all things finance even more. The link is in the description below. So today we're looking at Churchill Capital Corp SHE, and this report is all about their big debut in the stock market. It is called an 8K filing, which basically means something important just happened, and the company has to tell everyone right away. Think of it like a company sending out a press release, but to the official financial watchdogs. For Churchill Capital Corp XE, the big news is their initial public offering, or IPO. This is when a private company first sells its shares to the public, and it is a huge moment for them. This particular report is filed to announce the completion of their IPO, and it happened on the 18th of December 2025. Now, what exactly did they sell? They sold what they call units. Imagine these units as a bundle deal. Each unit contains one share of the company's stock, which they call Class A ordinary shares, and importantly, a piece of a warrant. A warrant is like a coupon that gives you the right to buy more shares later at a set price. In this case, you get 1/10 of a warrant with each unit. So if you have 10 units, you've basically got one whole warrant. This listing here actually defines those units. It tells us exactly what makes up the unit, one ordinary share and one 10th of a redeemable warrant. That is the basic building block of their public offering. Then we see this one. This defines their Class A ordinary shares. It is pretty straightforward. These are the actual shares of the company that people can own, and they have a very small face value, just $0.0001 per S hair. This is typical for many companies. And this one details the warrants. It tells us that each whole warrant can be used to buy one Class A ordinary share, and the price you'll pay to buy that share is $11.5. This is known as the exercise price. So if the stock price goes way above $11.5, those warrants become quite valuable. So the report is dated the 23rd of December, but the really important date, the actual closing of the IPO, was the 18th of December. The company sold a lot of these units, about 41.4 million units, and they didn't just sell the planned amount, they also fulfilled the underwriter's option to sell more, which was another 5.4 million units. These units, the shares and the warrants, they all started trading on the Nasdaq Stock Market LLC. That is a major stock exchange, showing that this company is now part of the big leagues. This, the Form 8K, is the official document telling us about these events. And here is something interesting. They've checked the box indicating they are an emerging growth company. This means they're a relatively new company and can benefit from certain regulatory flexibilities, like having more time to comply with new accounting rules. This section usually lays out the main story, and the story here is the IPO in a related transaction called a private placement. They sold all those units at $10 per unit. So from the IPO alone, they raised a massive $414 million. That is a huge amount of money for a company just starting out in the public market. This is the US Securities and Exchange Commission, or SEC, the government agency that oversees these filings to protect investors. But that is not all. They also did a private placement. This means they sold shares or units directly to a specific investor, not to the general public. In this case, they sold 500,000 units to their sponsor, Churchill sponsor SHE LLC, also at $10 per unit. This brought in an additional $5 million, so in total they raised $419 million. Now, a big chunk of that money, $414 million to be exact, is being held in a special US-based trust account. This is very common for IPOs of companies like this, often called a special purpose acquisition company, or SPAC. The money in the trust account is typically held until the company finds another company to merge with or acquire. If they don't find a suitable target within a certain time frame, the money is usually returned to the investors. So this $414 million isn't immediately available for spending on operations. They've also released an audited balance sheet as of the IPO date. This is a snapshot of the company's assets, liabilities, and equity right after the stock went public. It basically shows how much money they have and owe at that precise moment. This is included as an exhibit, meaning it is attached to this report. This section simply lists the exhibits that are part of the filing. And this last exhibit, it is related to interactive data, making it easier for computers to read and process the financial information. Now let's look at the bigger picture here. Churchill Capital Corp SHE is a special type of company called a SPAC. SPACs are essentially shell companies that go public with the sole purpose of raising capital to acquire or merge with an existing private company. Investors essentially buy into the SPAC based on the reputation of its management team and the hope that they will find a good acquisition target. The IPO is just the first step. The real story for investors will be what company Churchill Capital Corp SHE decides to acquire or merge with. From what we see here, the IPO was successful, raising a substantial amount of capital. The fact that they exercised the underwriter's over-allotment option suggests there was strong demand for the units. The full exercise of the over-allotment option means that the underwriters felt confident enough to sell even more shares than originally planned, indicating a healthy appetite from investors. The breakdown of the units into shares and warrants also offers flexibility. The Class A ordinary shares provide direct ownership in the company, while the warrants offer the potential for further gains. If the company's stock price rises significantly after the acquisition, the exercise price of $11.5 for the warrants is a key figure to watch, if the post. Acquisition stock price significantly exceeds this, those warrants can become quite valuable, potentially diluting the ownership of the original shareholders, but also providing a boost to those who held the warrants. The $414 million held in trust is a crucial element. This significant amount of capital is the firepower Churchill Capital Corp XE will use for its acquisition. Investors are now waiting to see which company they will target. The success of a SPAC largely hinges on the quality of this merger or acquisition. A well-chosen target can lead to significant returns for investors, while a poor choice can lead to substantial losses. The fact that they've elected to be treated as an emerging growth company means they'll have a bit more breathing room in terms of reporting and compliance compared to more established companies. However, this also means that some of the financial reporting might be less detailed than what you'd see from a mature company. Looking ahead, the key risk for investors is the acquisition itself. Will Churchill Capital Corp SHE find a company that is undervalued or has strong growth potential? Will the terms of the deal be favourable? There is always a risk that SPACs overpay for targets, or that the target company doesn't perform as expected after the merger. It is a high-stakes game of finding the right business to bring into the public market. In conclusion, this filing marks the beginning of Churchill Capital Corp XE's journey as a public entity. They've successfully raised a war chest of funds. The real test now is how they deploy that capital. Investors will be watching closely for any news about potential acquisitions. The success of this SPAC will be determined by the strategic acumen of its management in identifying and executing a value-creating merger. Alright, that is our breakdown of Churchill Capital Corp SHE's IPO filing. What is your take on SPACs in general and this particular company's start? Are you excited about the potential acquisitions or wary of the risks? Drop your thoughts in the comments below. If you found this analysis valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into the world of corporate finance. And don't forget to check out our Discord community linked in the description where we discuss these topics further. Thanks for watching. See you next time on Corporate Decoder.